Jeb, welcome. I'm a big fan of goldstocktrades.com and the highly sought after content you put out. One thing I want to start with is I've heard you mention that we're in another 40-year cycle, the likes of which we haven't seen since the 1970s. And hearing that makes my ears perk up because of how well commodities did in the 1970s. So what parallels are you seeing today, and what makes today such a bullish setup for precious metals and commodities overall?
Well, thank you so much, Early Stage Investor, for having me on. And I love your Twitter handle, the Early Stage Investor, because that's what Gold Stock Trades is really all about. It's about getting early, not just early on the cycle, but early in the life cycle of a miner. And it's very important for people to understand there's a life cycle of a miner. And there's very few people that you can find online that can tell you that they were one of the first U.S. investors, the first in some of these mining companies that now have very large market caps or have become mines or have been bought out by majors, because, you know, that's so important to be an early stage investor. And right now in the market, and what you talked about, the 40-year cycle, we're just starting the early stage of a breakout of a major gold rush. And I know that people in the early stage, you know, they get excited because these gains become so outsized. And, you know, there's a, you know, you see, you know, a 10 bagger and you're like, okay, let's take some profits here. But you don't realize in the early stage of a cycle, like we saw in 99, 2000, you know, the early stage is just the beginning of a major secular change of what we're witnessing of this 40-year cycle. And the last time we saw anything like this with gold going into new all-time highs nominally, it was the late 70s, early 80s, when we had that gold peak and the start of the last gold rush. That really continued through the 80s and 90s. I mean, some great gold mining companies were built during those years, including American Barrick. So if you were involved in gold mining back then, you know, you could be involved with some of these major mining companies at the early stage investor. And I've been blessed to meet the early stage guys, and I've spent time going around Nevada with them during the last bear market when no one had any interest. And looking at the properties with the guys that found American Barrick and the guys that sold out to American Barrick, which became today's largest gold mining company, which we heard about in the news a few months ago of Warren Buffett taking a position in. It's the largest publicly traded gold mining company. So that's so important for early stage investors. We're in the early stage of a major gold rush. We're just starting. Gold just really broke out in the summer of 2019. These cycles can last 10 years. So I think we're still early innings, early stage investing. And the key is, you know, not only to make sure you have your precious metals, but if you can look to find the miners, especially good quality miners, just an early stage cycle, and just sit on them through a cycle, fortunes can be made.
Why do you think today is kind of the beginning of this great bull run for gold equities?
Well, I don't know if it's the beginning. I think that the beginning, really looking back at it, was in the summer of 2018 when Vanguard left the precious metals business. The Vanguard was a major mutual fund, and there was a record net short position that marked the bottom in the precious metals and the gold mining stocks. And really, it's very hard. And you can see an article that I wrote where I predicted that, and I mentioned a stock called Great Bear, when Rob McEwen's investment at Great Bear at like $1. Well, the stock went to I don't know, 16 bucks, I think. It's a Seeking Alpha article. I can send you the link. But I wrote that in the summer of 2018 when Macquarie left the precious metals business, when Vanguard left the precious metals business. And I said, this really looks like a bottom. And some of the smart money, like Rob McEwen, is buying these juniors like Great Bear. And I mentioned that in the article. That looked like the bottom. Now, is everyone gonna catch the bottom? No. Only people that catches the bottom and the top are liars. That's what Bernard Baruch wrote in the 30s. But what's key is that we've been building a base for many years in the gold market, almost 10 years. And the bottom of that base was that summer of 2018, I believe. And now we're just beginning to break out of the base. So for some investors, they say, oh, I missed the early gains, because lots of us are sitting on stocks that have had 10 bagger gains. But the reality is this could be just the start of the breakout of the base. This could be the start of the leg and uptrend higher. Remember, the gold hit the high of around 2000 in 2010, 2011 cycle. We've had to sit now for almost 10 years basing. And now we finally broke out this summer, and we're had recently for the past 5 months a handle, because you have to understand all the people that bought the gold precious metals 10 years ago at those high levels, they waited 10 years to get back, and now they finally have a little gain, or they don't have a loss, and they're happy about that. And that's why there's a handle being formed, because there's some people that are getting back their money, breaking even, or some getting a little gains, and they're happy about that, especially with this crazy economy. And they're nervous, and that's normal. And that's why you have what's called a cup, a huge base, and a handle. And that's what we had the past 5 months. But recently, beginning of the year, there's a whole new flow of funds. And some of the juniors went up 20% just because a lot of investors and fund managers are underweight precious metals, and they have a whole new flow of funds. And, since this coronavirus in March and April, there's been a huge amount of cash printed. More than any other year. I mean, I heard like 50% of, I don't know the exact number, but it's a staggering amount of dollars that have been printed since the beginning of the coronavirus crisis. This is all moving into precious metals and junior miners. A lot of it is. And this breakout in gold could be the start of that 40-year cycle. So, you might not have gotten the bottom, but this is where a lot of the smart money, like Warren Buffett, they'll wait to see the base break out before putting major funds into the market. It's more conservative that way, and they won't necessarily pick the bottom, but they're willing to buy on the breakout, which we saw the summer of 2019, the breakout in the gold price, and I think summer of 2020 we saw the breakout of the juniors and the miners, and that's going to be trickled down in 2021 and 22 to the developers and the explorers. So it's very important to look now, not just at the producers, but you got to start looking at what could be the next gold mine in production and who can come up with the next big discovery. And that's what gold stock trades is all about.
Yeah, you're right. The technical story, the situation with the charts, as well as the macro story are all converging onto this one point. And it does seem like there's a breakout, especially given the massive run up in GDXJ, like you just mentioned. So how are you taking advantage of this time? And what do you think the best way to kind of get into this is? You mentioned looking at the early stage explorers and developers.
Yes, well, you have to start learning the life cycle of a miner, as I mentioned before, the Lassonde, or otherwise people know as the Lassonde curve, and that really shows there's two big areas where you can make a lot of gains. Meaning, for instance, there was one gold stock. I'd prefer not to mention the company because they have drilling news pending, and I don't want it to. I'd rather wait till the news comes out, because I don't know. I'm hoping from the science that it's good, but you never know. It's exploration. It's risky. But we got in sub 10 cents, and the stock had a great drill result in May. That kind of changed the whole perspective, and the stock went from 8 cents to $1.90 in a matter of weeks, and got a large investment in Alaska from Eric Sprott, who's a major billionaire in Canada. and it had a 3,000% gain. That's much larger than you can have in gold bullion, much larger than you could ever have in a producer, much larger than you can ever have really in a developer. And, that's where life-changing, opportunities are found, is with the drill. So that's what Gold Stock Trades is about. That's what I've been following. The drill is everything. So you got to learn the drill results. You got to learn the good people. Really, I'm not the smartest geologist or engineer. I mean, I studied engineering. I have a degree in mathematics. I'm pretty smart, but I was never that top of the class technical guy. I was more the market guy. I was always following the market. Even since my bar mitzvah, I've started, 14, 15. I've had love the market, not necessarily love the textbooks. But you have to know the right people, the right technical people, sometimes knowing the right group and network and people who have had the track record of success. And so, one of the reasons why I found out about this story is because I knew the geologist from a prior story that got bought out by Lundin Mining. So, and the very talented geologist. So that gives me clues that, you're not dealing with, you really have to know the right people. And that takes time. And that's why I spent the bear market the last 10 years going to conferences, meeting with geologists, meeting with engineers, the smartest minds, and developing a track record in the industry, and watching those people. That's what I try to provide for people who are new to the sector. A chance to find out really who are the guys that can get the job done and get these mines into production, or really show a major miner that this is a real discovery and could become a mine.
Yeah. So do you look at the companies that you select from every single angle, right? Financially, do you make sure they have a good balance sheet, and just the geological prospects? Like, do you really dissect these companies before recommending them?
There's so much to study, and that approach has changed over time. When I was starting in the sector back in the late 90s, I was, mostly using charting and technical charts. I did not have the technical know-how yet. Then I went to college for engineering and studied a lot of geology, and then I developed more of the fundamental, but it started off technical, and then I went fundamental, and now I've kind of combined. You gotta combine both. It helps to see, what the market is thinking. The chart shows you what the market's thinking. And a lot of times there's a big disconnect between what the market is thinking and what the technical guys are thinking. And sometimes you have to convince the market what the technical guys are seeing. And it sometimes takes a while for that to there's always that balance between technical and fundamentals. And there's that disconnect because it's not, especially once you get into the juniors, it takes a while sometimes for the money people to realize that a discovery is a discovery, and if it's real or not real. It's mining is not a 2 + 2 =, it's not always exact. And there's lots. That's why you see some companies, they'll come into a project, and then it's a great project, they leave, and a new company comes, and they actually make the discovery. It's just, and sometimes it's a new look, it's a new perspective. It's not always black and white geology and mining. It's and you need a lot of science, but there's also common sense, and there's really a lot of being at the right place at the right time. And that's critical in mining. And I think right now, for investors, you're in a market where good developments and good news are going to be, really, the market is going to be connected. I think there's now a connection between the news and the market, and the market is willing to speculate on these juniors because of the environment that we have gone into, where many investors are looking for real hard assets, precious metals, and they're seeing this economy that there's just so many dollars being put into the system.
Absolutely. And, part of this inflationary cycle is a lot of different commodities are going up. Right now I'm sifting through all the noise. You have uranium, you have oil, natural gas, all these commodities. Do you think that in commodities bull markets that precious metals perform the best generally?
Well, the reality is that if you let's look at gold and silver. Silver will, in a bull market, perform better than gold. That's just the reality. Is that if we're headed into a gold market, silver's like gold on steroids, and it's the same thing in a bear market. And junior miners will outperform gold in a bull market, and will underperform gold. It's huge leverage to the gold price, junior miners, silver. But recently, this past summer, when gold was way above the moving averages, I was getting concerned, maybe, we could have a technical correction, but copper really didn't move yet. Copper was still cheap. Platinum was still cheap. So you have to sometimes rotate within the metals. I do not, I'm not really convinced yet, although I did make a few trades in natural gas. Oil has been one place that's been where investors have been hurt this past year, but that's good for precious metals because their costs. Oil's a major cost in a lot of these producers. So the bottom line, lower oil prices and higher precious metal prices have been is very good, very profitable cash flow that comes into the gold sector that's going to trickle down into the developers and explorers. But in the metals, palladium, one that I've been very bullish on the past couple of years. Palladium's hitting all-time highs. It's above $2,500. So within the metals, I also look at the rare earths. You don't want to, China right now, this crisis with China. I think that buying companies that are completely reliant on China is very dangerous. Many of these companies are reliant on China for critical minerals and for many of these commodities and strategic metals. And that's going to be an area that's going to be a huge boom because the end users are going to realize it's dangerous to become completely reliant on China for any of the key components of their product. And I think that's going to be a big area outside the precious metals. That's going to be a huge boom. And the rare earths, lithium, copper is used a lot in the electrification of, and I've been a believer that the electric vehicle market is going to boom, and the battery metals. And that's another area that I have in my portfolio. And I think that if you're a junior mining investor, you got to research these areas because we're at a time right now where we've lost that production. We've lost those industries to China over the past 20, 30 years. And I hope that we will begin to regain some of those industries, or we'll learn the lesson of this past year not to become completely reliant on our critical materials that really drive all these technologies, all on one country that we've had tensions with for the past, since the rise of communism with Mao Zedong. So it's an interesting time for commodities, and it's definitely an interesting time for those commodities that are all dependent, on Chinese production. I believe that within the commodity and the metal space itself, you can get so much diversification, and hard assets are the place to be. And within the metals, and we have something that we've never had before, really, as a whole change of the internal combustion engine to the, that's requires mining. I mean, we're the first time that we've seen gold mines become electric. Kirkland Lake is making gold mines, one of their gold mines, electric up in up and Newmont up in Ontario. So there's many exciting things for investors inside precious metals and industrial metals and the battery metals. So I'm kind of diversified across that. And I think the hard assets and the metals is the place to be right now. It's been in a bear market for many years. It's a store of value, and we're continuing to print money. And the tech stocks are way overbought, extremely high. The PE levels are ridiculously high. All the valuation metrics are at bubble territory. Meanwhile, these metals and these commodities and these junior miners are setting up for the first time, for the numbers are just beginning to generate cash flow for these producers and trickle down into the junior miners. So it's still early stage for the miners, whereas the stocks and the bonds are way overbought and ready to possibly correct in 2021 in a major way.
Absolutely. And so I've heard you comment on the supply side and how there haven't been a lot of great discoveries. What kind of outlook do you see for the supply side of precious metals? Do you think we've hit maybe peak gold? Or do you think maybe as more money gets poured in, we'll find a whole lot more gold that no one's really discovered yet?
I think that, there's a lot of gold there. The reality is the budgets for most of these juniors have been low for many years. So finally, and it may start trickling down to the explorers again, but we have lost a whole generation of technology and technical know-how of geologists and the lack of investment into the sector. So it's going to take some time, but I'm convinced that with the exploration methods that we've gotten, a lot of these projects have not seen modern exploration. And that there's going to be, for many years, people thought Nevada was empty of gold, and they found some of the best gold mines in the 80s with American Barrick. And I hung out with those guys in Nevada, and that totally changed the gold industry in the 80s and 90s. And it was just a group of investors and geologists that really built that. And I believe it's going to happen again. I think that this is where it's really set up for. We're going to be going into another gold rush, and that, there's going to be, some discoveries made, and they're going to get top dollar for it because it's just been so hard to make a new gold discovery. But for new investors, really be careful of the jurisdictional risk. Really question to see if there's been any mines in the jurisdiction. Look at infrastructure. So important to make sure that it's near roads and power. Just basic, weeding out some of these projects or local indigenous issues. Like when you see that there's lots of opposition, or it's in a rainforest or protected area, you got to really do your homework before putting a lot of money. And especially, some of these jurisdictions, there's the rise of resource nationalism, and some have gone very far left wing, and you always have to be careful of that in South America and Africa. Some teams can operate in those riskier jurisdictions, and other teams can't. But you got to really do your homework and your due diligence, and have someone to talk to that's been in the industry. Find a mentor or coach is so important in the mining sector that you can ask questions to that experience. But you don't want to get overly cynical too in the beginning of a bull market either. You want to find people that understand the capital markets and see the bigger picture, not just stick with the naysayers that are just going to throw away every opportunity that comes your way.
Yeah, and that's what I like about gold stock trades, is that you do the hard research for us. which is very useful. So and everyone wants to maximize their returns right now with an exposure to the precious metals. And your service is excellent. It finds good companies. You do the due diligence. But what about buying an ETF? Do you think that would limit upside potential, like SILJ or GDXJ?
Yeah, it's bad. It's bad news for. I mean, be quite honest with you, it's the lazy man's way, and they label some. It's the most misleading. The SEC. You know, talk about misleading advertisement. They say it's a junior gold fund, but most of those are not junior gold stocks. Now, what I look for with GDXJ is which one of my stocks could eventually get uplisted to the GDXJ. That's the goal. That's my goal at Gold Stock Trades. Like I have 4 stocks that I recommended at much, much lower market caps. They just got uplisted to the GDXJ at the end of the year, and they had millions and millions of shares of buying that came in from the GDXJ. Once it gets to the GDXJ, a lot of the profit that you could have made if you subscribed to Gold Stock Trades or really found a good coach or, a mining, person that's been around that could get you in. The goal is to get in way before they get listed into the GDXJ. That's the goal in because the juniors, once they reach the GDXJ, some have like 350 million market caps. And you and I have discussed companies that still have 20, 25 million market caps. So, like that story I told you about earlier that had a 3,000% gain, they got into the GDXJ, but when we were highlighting it originally, no one knew about it. And those are where the big gains in mining, the early stage investing gains can be made.
Yeah, I love that. It's the lazy way out to get into an ETF because let's say there's a huge bull market. Well, the GDXJ might only go up 3 times, whereas all the junior miners might go up way more than that. So why not get with the service, and get some exposure that way to some really small cap stocks, right? I mean, why limit the gains?
Well, that's the goal is can you find, that's where it actually takes work. Can you find the companies that really haven't been discovered yet by the smart institutional money? And, it's easy to find the companies that everyone's talking about on Twitter and everyone knows it's a great stock and it's, that's easy, and you might, but the goal, my goal and where I've made a lot of money is finding those companies that a lot of people kind of ignored. And then I saw a hidden value or gem and, and then was proven by the technical team through drill results. And then everyone else starts discussing it. And then that's when you can, take some money off the table. And that's, I think, the important thing in junior mining is you kind of have to have a contrarian, but you have to build a case. And, that's why, a newsletter is important, and the work that goes behind that, it's not easy. It takes time and years. And, the reality is you got to take a lot of, Babe Ruth, hit a lot of home runs, but he also struck out. He was also the leader in strikeouts. This is a risk business. This is, but if you stay in it and you keep on playing, if you stay at the table, eventually you're going to hit a home run or a grand slam. But if you're just going to do the GDXJ or find the stocks that everyone else is talking about, and they're already, big stocks, then, you're not going to get those home runs and grand slams. It's just the part of this business, and that's where it's takes work and effort, and that's kind of what I've tried to find these companies long before the big institutions find them or they become popular. By that point, these companies are already in the GDXJ or they're already 300, 400 million market caps, and you can't really get those 20 baggers. And that's what I kind of want to try to find for my subscribers.
Yeah, totally. And then, my last question, just kind of about the political landscape. Do you see like the Democratic administration being more favorable and more inflationary, and the whole fiscal situation, monetary situation, just, you know, with the election results being more bullish for precious metals?
Oh, I see. The reality is that both Republicans and the Democrats really do not care about the debt and deficits. I mean, that's the reality.
Yeah.
It's just one party is a little more ostentatious about that. And that's the Democrat Party. They're just gonna, like Secretary Yellen, you look at her speaking schedule. I mean, look how much money she's made personally from all these large corporations and banks that are all asking for a handout now. And
Yeah.
they're all asking for handouts. They're all broke. The whole country's broke on a fake economy. Fake, everything's fake. And the only thing that I find really right now that's real are the precious metals. I feel that they're just counterfeiting money. They're just printing dollars to throw at this. A lot of this crisis, was a lot, used politically, and people have made fortunes off this, whereas the middle class and so many people's lives have been destroyed. It's really not Republican and Democrat. They've all been spending like drunken sailors, just kicking the can down the road. It's pathetic, and it just disgusts me. And that's why I, trying to make my own garden grow and focus on precious metals. And the most way I can get leverage with every dollar that I have is finding the junior miners that could provide that leverage and find a 1,000,000-ounce gold deposit, or has millions of ounces of gold but could add another 10 million ounces of gold, something like that. That's what I'm trying to stick to, because I don't trust really the fiat system. I don't really trust the integrity of a lot of this past year has kind of made me realize you got to really protect yourself. And I'm so glad that I stuck to the junior miners and to precious metals, over the past few years, when everyone was chasing these other stocks and these pie in the sky, because I believe that in the next couple of years, mining, farming, food, fishing, real things that you can make with your hand, it's going to become more and more in vogue. And that this is a wake-up call. This year has been a wake-up call to many investors. And yes, do I think the Democrats coming in, it's going to be out of control? I mean, spending and stimulus and corporate bailouts. And but I also think that the tests, you're going to see the tests, the cases come down after Biden gets in. You're going to see things sort of disappear. And well, we'll see what happens. Just stick to precious metals, stick to junior miners, take care of your family, protect yourselves, do your homework, do your due diligence on everything. Make sure you do your homework on the vaccines, check the safety, check the efficacy, do your homework on, question everything. Do your homework on the masks. Are the masks really effective against a very small virus? I mean, we really need to ask a lot of questions. And ask about our financial system. Are our banks really safe? Are they really lending out money to investors? And I don't think so. And that's why, I've kind of stuck to precious metals, and I really believe that it's going to be a bull market of a lifetime, because people are wising up that, the foxes are running the hen house right now. And, they're not helping us out of any problems. They're making the problems bigger. And we need to take care of ourselves and protect our own families and our own portfolios, because they're going to the dollar's crashing. And the banks, keeping your money in the bank, you're going to start losing money big time. So you got to stick to precious metals. And the best way to get leverage on that is finding the great junior miners.
Yeah, that's great advice. And you gave us a lot to think about. So, what is the best way that people can learn more from you? Where can they go?
I mean, Twitter's, I guess, become my go-to social media. That's where I have the biggest following. You can always message me there and follow me at Gold Stock Trades. You can sign up for my email. I have a free email. I have also a premium service newsletter that's $25 a month or $250 a year. Very nominal, that you can sign up for. But most of my content really and my communication right now is Twitter and my website, goldstocktrades.com, but mostly social media, Twitter, and you can email me at Jeb, Jeb, at goldstocktrades.com if you have any questions. Thank you so much for having me on here. And people are looking for early stage opportunities in mining. Gold stock trades is a good opportunity, and I definitely think we're early stage in the precious metal cycle and the commodity cycle. We're still just beginning to break out of a secular long-term downtrend in commodities since 2007. That's like 13-14 year cycle. So for commodities, we're just beginning to break out for the industrial metals. Gold may have, broke out last year, but for the commodities, we're just beginning to break out.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.